Hello and welcome to our monthly residential property market update. I'm Lillian Chin, Director Client Partnerships with La Trobe Financial. Property market commentary is a lightning rod for hyperbole. When it's going upwards, it's a bubble. When it's going down, it's a collapse. Champions of each argument are invariably wrong, and the truth tends to lie somewhere in the middle. Before we review the current performance, let's recap the property market in the period immediately prior to COVID. From December 2017 to June 2019, we saw national prices down 8.2%, driven by double-digit falls in both Sydney and Melbourne. At the time, regulators were introducing reforms to address perceived market hotspots. Sentiment alone drove the market more than any tangible economic forces. The message was received loud and clear. In 2019, the housing turnover rate, which is the percentage of total housing stock sold each year, fell to its lowest ever recorded level. Yes, even lower than through the 1990s recession, when lending rates were at 17% per annum. To some degree, a rebound of some magnitude was therefore inevitable, and it was no surprise that the rebound was particularly strong. It is worth noting that through the peak growth period of Q1 2021, housing turnover rates were actually just returning to their decadal average. Following the period of strong growth, we are beginning a period of moderation in prices. Again, confidence and the perception of falls is motivating the market, despite no large falls evident market-wide. Yes, we have rising interest rates, but most serious analysts still have a ceiling on rates at what would historically be considered low. Indeed, the perception of whether it is a favorable time to buy a house has fallen. The specter of increasing lending rates and the idea of falling prices for now has buyers pausing for thought. We may see property values fall 15% from peak to trough in some markets. Noting gains of around 25% in the past 2 years, this is still positive territory. Confidence may be low, however, underlying fundamentals do not point to a collapse. Economic growth is positive, people have jobs, and migration is slowly returning. These all support residential house prices, and we will continue to watch the data with great interest. Thank you for taking the time to watch our property update. If you have any queries, please contact our asset management team on 1-800-818-818.